The stock is heating up, and investors are placing their orders for Domino's. As technology changes the delivery game, can this pizza pioneer make a seamless transition to the digital age and cook the competition?
I've said it before, I'll say it again. Do not give up on great companies just because they hit a speed bump. Just look at Domino's Pizza. When Domino's reported a not-so-hot quarter in February, the stock got obliterated, trading down to $239 a month ago, as everyone started worrying that maybe the company couldn't deliver now that longtime CEO Patty Doyle had retired. Oh, come on. That was the moment to buy the stock, not sell it. In recent weeks, Domino's has taken off, thanks in part to the analysts who keep pointing out that it had gotten too cheap to ignore. Then this morning, the company reports a seemingly mixed quarter, yet the stock pole vaulted $13 or 4.89%. Why? Because while the same-store sales came in weaker than expected across the board and the total revenue was a little soft, Domino's had excellent margins. And when you factor in the impact of their huge buyback, management was able to deliver a terrific 11-cent earnings beat off a $2.09 basis. Apparently, that was enough to reassure the bulls, and the stock was off to the races, rebounding to $283. Is the comeback for real? Let's check in with Ritch, Allison, the CEO of Domino's Pizza, to hear more about the quarter and his vision for the future. Mr. Allison, welcome back to Mad Money.
Hi, Jim. Great to be with you again.
All right, Ritch, I was a little worried when I saw the same-store sales, but I could not believe how much money you could be making in this environment with the same-store sales number. How was the cadence of the quarter? Is it just starting to gain a lot of steam right now?
Yeah, Jim, we're continuing to see terrific momentum in our business. In the first quarter, our global retail sales grew 8.5% when you adjust it for currency, continuing to see, terrific profitability on the part of our franchisees. So we're excited about where the business is and the momentum that we have behind it.
How many stores do you need? Because I want to congratulate you. You just opened your 16,000th store. Now, I'm a Domino's user, and I go where I go. I use Domino's, but I got to know, do you need another 5,000 stores?
Jim, we need a lot more stores. When we take a look at our business and we look out toward 2025, we see a business that could have 25,000 stores, about 8,000 of those in the United States and the rest outside. And it's all part of our strategy to fortress the markets that we operate in, which brings a lot of benefits. Gets us closer to the customer so our service improves, lowers the cost of that delivery as we're driving fewer miles, and also, frankly, improves the wages for our drivers because they're getting more delivery runs per hour.
Well, that's important because I was going to ask you, how do you keep your drivers, given the fact that we've had almost all the companies that deliver, and they all say the same thing. It's a mad scramble to get employees. I guess because of the way that you work, you pay more than everybody else.
Jim, we do. When our stores are busy, our drivers are making a lot of money. And the other thing that comes along with it with Domino's that you don't get in some of these other businesses is that there's a path to becoming a small business owner and even a large business owner inside the Domino's system. 90+% of our franchisees in the United States started off as drivers or answering the phones in our stores. It's just a great way to build a business and build wealth over time for folks that are willing to go after it.
Are there master franchisees who actually started as delivery people? Master?
There sure are.
Really?
Some of our largest master franchisees around the world started off delivering pizza. Don May, our CEO of Domino's Pizza Enterprises, our master franchisee based in Australia, began as a delivery driver, and now he runs a business with about 2,500 Domino's Pizza stores.
Well, I wish more people knew this kind of thing. I know we've talked about it with Mr. Doyle before, because I think there's an essence that if you didn't go to Stanford Business School and you didn't code, well, you know what? You've been left behind. These people not only have not been left behind, but I bet you they even have a good technology background by the time they finish working as a delivery person at Domino's.
Absolutely. Technology is such an important part of our business, Jim, through and through, from the consumer interface, now coming all the way back through the stores and out in the hands of our drivers. It is really permeating every part of our business.
Now, you launched, when you were here last, a program. It was taking pictures of pizza, any pizza, uploading them to the Domino's app. Obviously, the more people get the Domino's app, the better. How successful was that, and how's the rewards program doing?
You know, Jim, we're really pleased with our Points for Pies program. You know, it's helping us deliver on some of our important objectives. We wanted to get our app downloaded on more consumers' phones, and that's happened. We wanted more enrollments into our loyalty program, and that's happened. And now we're starting to see some of those new enrollees ordering and ordering again. And in addition to all of that, it's given us some really interesting intelligence about where else our consumers go to buy their pizza. So our customers don't eat all of their pizza at Domino's. We want them to eat as much of it as possible, but they go other places. And now we know a lot more about that than we did just a few months ago.
Is it helping you take share? I mean, you've got a bunch of competitors. I know that you have been the share taker. Is that still continuing?
Absolutely, Jim. You know, in the first quarter in the U.S., our retail sales grew 7.9%, you know, and that's in a category that grows at very low single digits. So we're continuing to take a significant amount of market share. You
talk about a term in the conference call, fortressing impact, because you're worried, some of the analysts are worried about aggressive promotional activity by third-party delivery weighed on the U.S. comp this quarter. Talk about fortressing delivery and what it means to make it so that you guys, you have a moat versus everybody else.
Yeah, Jim, if we want to win for the long term, and we sure do, we've got to do a couple of things really well. You know, number one, we've got to provide great service and consistent service to our customers. And number two, we've got to be the lowest cost delivery provider out there. This fortressing strategy really works on both of those dimensions. As we tighten those delivery areas down from our historic 9-minute or so drive times down to 5 or 6 minutes, it shortens the time to get to the customer, and instead of getting there in 30 minutes, we can get there in 25 or 20, or even some of our great franchisees who are getting it done in 15 and 16 minutes. And then secondly, the more runs that we get per hour, it just improves the economics of each of those delivery orders, because in some of the high-wage labor markets today, it's really difficult to take $20 worth of food 9 minutes away from your location and make money on that order. We have to bring these territories down tighter to accomplish our objectives and to protect ourselves against this new emerging set of competitors.
Well, it is absolutely working. I'm so glad that the numbers are back. I think that it's always been the best business model. Ritch, you're doing a fabulous job. That's Ritch Allison, CEO of Domino's, DPZ. Let the Bears keep trying to knock it down. Forget about it. Great business models always win with good management. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.